Keshav, a many concern for many industries, and I'm sure yours as well, is the kind of spiral up that we've seen in crude prices. Wanted to understand how is it that you're dealing with not just crude, but other input prices as well, spiraling up?
Definitely there is pressure because, as you know, a lot of raw material prices have shot up, whether it's crude, whether it's paper, whether it's timber, chemicals, everything has increased exponentially. And we too are facing strong headwinds due to the same. Having said that, you're absolutely correct. The demand environment is very positive. And I think, for a company, for us like market leaders, we have been able to pass on quite a large chunk to the market in the form of price increases. Yes, passing on the total quantum may take a little bit long. The horizon might be 1 or 2 quarters. But having said that, the operational leverage that we get due to the higher sales would compensate for the increase in raw material cost.
Let's get straight down to it. Gold, the safe haven. We saw how gold prices behaved and the price action, especially during the geopolitical tension and even when the stock markets turned volatile last month. What has been the impact on your gold loan business?
Gold price has seen good fluctuations or reasonable fluctuation in the last 2 months. But overall, if you look at the trajectory of the last 1 year, 2 years, it is steadily going up. It has not really fallen. So you can say almost the price is steady. So that is good for any business, and that is good for gold loan business also, because a steady price is definitely good. Occasionally there are ups and downs, but as you see today, the price is stable.
Tell us a little bit more about this acquisition of Media Agility, how it's going to boost your portfolio in the cloud space, because it is going to be EPS as well as margin accretive, I understand.
Before I take you through the EPS part, let me set you the context for you and your viewers on why we have done this acquisition and how it positions us in the bigger picture. And as you would all know, prior to COVID, the enterprises had already started their digital transformation journeys. During the COVID, these transformation journeys accelerated significantly. And the hyperscalers have also taken notice of this. They have been continuing to bring out newer services, vertical specific offerings, even at an accelerated pace, virtually every month. Now, as we look forward, all these hyperscalers, whether it is IBM, Google, Microsoft, AWS, or SaaS providers like Salesforce, are going to play an incrementally bigger role in the enterprise journey. And it is much beyond just the lift and shift that we have seen at a bigger scale in the past. Now, at Persistent, if you look at it, we already play at scale with people like Salesforce and IBM, where we are a $100 million plus player in these ecosystems. And with the recent acquisition of Data Glove, we had further, put a bigger, play on the Microsoft Azure cloud side. And so the latest acquisition is our, intent to go much bigger in the Google Cloud platform. Each of these platform providers have their own niches and their own customer base. So we are trying to be the Uber of the cloud services for our customers and prospects, and that's where this transaction fits it nicely. Now, whenever you do a transaction in the initial year, there is a certain cost of doing the transaction, and there's amortization that kicks in before the synergy revenues start kicking in. For the first year, we are expecting this to be on the EBIT side, having a 45 to 50 basis point impact, but we are very confident as we go ahead, as we bring the organization in, integrate the organization into our fabric, and take these services to our customer base. We expect this to be over the next 2 to 3 years much more accretive to the EPS side. But having said that, the first year will be 45 to 50 basis points, having an impact on the negative side.